Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale, and I'm here with a great video on how to improve your credit score. Credit scores are used for almost anything when it comes to debt, home loans, car loans, and not enough taxpayers know about how to improve and maintain their credit score. So if you want to find ways to improve or enhance your credit score, tune in and let's get started right at the beginning. Did you know that credit scores actually began in 1989? That's just over 30 years ago. So the credit score industry is actually relatively young. Before the credit scores, lenders could determine whether or not they wanted to lend to you based on your character. For example, you could have an excellent history of repayment, but just because the lender didn't like you meant that they could deny you the loan. This meant that banks and lenders had way too much power. They could determine who owned homes, who owned cars, and who owned businesses. This system allowed these banks and lenders to oppress minorities. So in 1989, when the FICO score was introduced, it was introduced so that there would be more fair treatment for all. So basically, what is a credit score? It's a numerical rating of how likely you are to repay your debts. The higher your credit score, the more likely you are to pay back your debt. Therefore, you get all the best interest rates and deals when it comes to lending. The lower your score, the less likely you are to repay your debt based on a history of not paying on time, and as a result, the higher your interest rate will be on future debt. One thing people don't understand about credit scores is that they're very difficult to raise, but they're so easy to lower. Missed payments or defaulting on a loan can have years of an impact on your credit score. Let me share with you my 5 tips on how you can improve and maintain your credit score. Tip number 1, pay all your bills on time. I know it seems straightforward, but a missed payment can stay on your credit score for 7 years. If you're a forgetful person and you typically miss deadlines in general, maybe set up your payments on auto pay. This will ensure you never miss a payment. Tip number 2, dispute errors on your credit report. The truth is that identity theft is a real thing, and people try to steal your identity to create loans and credit accounts under your name. So the minute that you see something odd, call up the lenders, call up TransUnion and all of these credit agencies in order to correct the issue. Tip number 3, be strategic in how much you actually spend on your credit cards. There's something called credit utilization, which has a really high weight on your credit score. People think that as long as they use their credit card and pay it off, that they'll be fine and their credit score will be great. Sort of. You see, you don't want to use that much of your credit availability on an ongoing basis. Typically, the number is 30%. You want to use less than 30% of your credit limit across all of your cards in order to continue to have a good score. Taxpayers with the highest credit score actually use less than 7% of the credit limit on their card. There's actually 2 strategies on how to keep your credit utilization favorable. The first one is pay off your balance in full right before the statement cuts. This ensures that when the balance is posted for the cycle, it will not be a very high utilization. The second strategy is that year after year, you should be calling your credit card companies to ask them to raise your credit limit. Even if you're not going to use that credit availability, by raising your credit limit, you're essentially increasing how much credit you have available to you. So by default, your utilization will go down. Which leads me to my tip number 4, ask for higher credit limits. If you are a taxpayer that is consistently paying off all your debts every month and on time, you should ask the credit card companies for higher limits. When you have a lot of credit available to you, your credit score goes up. You see, a lender basically sees, well, this other lender is willing to give them this much, so I should be willing to give them this much too. Tip number 5 is becoming an authorized user. This is called credit piggybacking, and it does take a lot of trust. Basically, when you're an authorized user on a credit card account in which the main user has really great credit, that rubs off on you. As long as a credit card continues to be paid on time, you can benefit from this person's amazing credit. We hope you enjoyed these awesome tips on how to raise and maintain your credit scores, and I hope that it helps you reach your financial goals. To stay up to date with all the information we're putting out, hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.